Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Kopin.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And a quick note before we get into today's stock. If you need emergency cash and want to look at a short-term installment loan option, you can check out MaxLend Loans through my link below. Eligible customers may qualify for loan options up to $3,750, and funding may be available quickly if approved, but please be careful. Always read the full loan agreement, APR, fees, repayment schedule, and total cost before signing anything.
Definitely crucial to read those terms carefully. So, diving into Kopin today, this is quite the story, isn't it?
Oh, it really is. I mean, for the longest time, if you looked at this company, you just saw this this sleepy micro-cap display supplier.
Right, just kind of operating quietly in the background.
Exactly. It was widely considered a laggard. But almost overnight, we're witnessing this complete structural metamorphosis. They are aggressively crashing the gates of the artificial intelligence boom.
Which is wild to see.
Yeah, it is. They're repositioning themselves, not just as a reliable defense optics powerhouse, but as an actual pioneer in data center technology. And, Wall Street is really just beginning to wake up to it.
It's a fascinating pivot, honestly, because when a company manages to fundamentally shed its old identity like that, it stops being a stagnant ticker and transitions into a high-volume momentum play.
Yeah, totally.
And for anyone paying attention to the rapid evolution of tech hardware, this is exactly the kind of inflection point you want to evaluate before the broader market prices it all in.
Absolutely.
All right, let's move into the wealth building context.
So when you're constructing a portfolio designed for long-term growth, you're ultimately hunting for exposure to global megatrends.
The big macro forces.
Right. And right now, there are two colossal, heavily funded forces shaping the global economy. The first is the rapid modernization of the United States military, specifically that aggressive push toward advanced networked battlefield tech.
And the second being AI, I assume.
You guessed it, the hyperscale build-out of artificial intelligence infrastructure. And the defining trait of Kopin right now is that it offers what we call asymmetric exposure to both of these megatrends simultaneously.
And let's unpack why that is so highly unusual, because it goes straight to the heart of practical portfolio design.
It really does.
Most of the time, investors face this frustrating either-or scenario, right? Like, if you want stability, you allocate capital to a legacy defense prime contractor.
Right, because they move slowly, rely on predictable government contracts.
Exactly. They offer a reliable floor for your money. But if you want explosive, exponential growth, you're usually forced to wade into the incredibly volatile waters of AI startups.
Which is terrifying for risk management.
Totally. Those companies burn through cash at an insane rate, and their valuations swing wildly on every single press release.
You're hitting on the core tension of risk management there. Finding a single asset that bridges those two opposing profiles is extraordinarily rare.
So Kopin gives you both.
Yeah, by looking at this specific crossover, you're anchoring your capital to the bedrock of United States military budgets, which establishes your downside floor. But simultaneously, because of their new optical interconnect technology, you hold this highly leveraged call option on the future of data centers.
A dual-engine growth narrative.
Exactly. That unique combination makes this a very compelling candidate for a long-term, multi-year hold, rather than, something you try to flip on a quick news cycle.
Makes total sense.
Now let's look at the fundamentals.
Right, and this is where we really have to put our analytical hats on, because the recent financial metrics, they require some serious context.
They definitely do. It's a bit of a mixed bag at first glance.
Because if we look at the fourth quarter of 2025, you're going to see a pretty steep revenue decline. Total revenues came in at $8.4 million.
Which is a 42% drop year over year.
Yeah, a 42% drop.
Yeah.
And if we drill down further, their product revenues specifically fell 56%, landing at just $5.6 million.
So if I'm an investor looking at those numbers, my immediate reaction is panic.
Right.
A drop of that magnitude warrants intense scrutiny. Like, is this grand repositioning just a distraction from a sinking ship?
On the surface, I completely agree with that skepticism. But we have to look at the mechanics of why that drop occurred. Because it wasn't a failure of their engineering, and it wasn't a sudden loss of market share to a competitor.
Right, it was Washington.
Exactly.
Yeah.
The decline was entirely driven by government shutdown-related delays impacting U.S. defense procurement. The bureaucratic system simply froze.
It just stalled out.
Yeah. But on the flip side, During that same period, their non-product revenues, which includes funded research and development and grants, actually surged 47% to $2.5 million.
Wow.
Think of defense procurement like a giant industrial funnel. The orders are pouring into the top of that funnel, and you actually see that in their first quarter 2025 data. They reported a 2.8 to 1 book-to-bill ratio on $28 million in orders.
Okay, so meaning for every dollar they billed, they booked almost $3 in new orders.
Exactly. The demand is absolutely there. But a sudden government shutdown acts like this heavy cork shoved into the bottom of the funnel. The revenue hasn't evaporated. It hasn't gone to a competitor. It's just pooling up, waiting for Congress to pull the cork so the capital can flow onto the income statement.
That is the perfect way to visualize it. And we know the underlying operations are sound because just one quarter prior to that delay, in the third quarter of 2025, they posted a $4.1 million net income, completely reversing a substantial loss from the prior year.
Right.
But the most crucial part of their fundamental story right now is how they've fortified their balance sheet. They recently secured a $56 million private placement from a group of strategic and institutional investors.
That's a huge injection of capital.
It is. Because of that influx, they now hold $37.8 million in cash and cash equivalents, plus another $23 million in bonded cash.
Now, when retail investors hear the phrase private placement, they often immediately worry about, toxic debt spirals or their shares getting diluted to zero.
Oh, absolutely. It's a common fear.
But this is a totally different scenario. This gives them a serious war chest.
Exactly. It completely changes their operational dynamic. They now have the dedicated capital to aggressively scale their manufacturing lines and fund their AI development without having to take on high-interest debt.
So they're transitioning out of that vulnerable cash burn phase.
Yes, into a self-sustaining model. And this war chest protects their greatest asset, which is their competitive moat. Right now, they're the only company in the entire world producing 4 distinct types of microdisplays. We're talking AMLCD, FLCOS, microLED, and OLED technologies.
Wait, let's pause and translate that alphabet soup for a second.
Good idea.
For an investor who doesn't build advanced military optics in their garage, what do those 4 distinct acronyms actually mean, and why does the Pentagon care that they have all of them?
That is a great question. Basically, it proves they aren't a one-trick pony. AMLCD is your rugged, reliable, active matrix liquid crystal display, which is perfect for surviving extreme battlefield temperatures. Then, FLCOS offers ultra-fast response times. MicroLED provides blinding brightness, which is critical if a soldier is reading a targeting screen against a glaring desert sun. And OLED gives you incredible visual contrast for night operations.
So they cover all the bases.
Exactly. By controlling all 4 technologies under one roof, they can custom build exactly what a specific weapons program requires.
And it's all manufactured domestically, which brings up DFARS compliance, Defense Federal Acquisition Regulation supplement.
Oh, the supply chain security aspect?
Right. Essentially, the Defense Department has grown incredibly paranoid about supply chain vulnerabilities. They literally cannot afford to have a critical microchip manufactured overseas where a sudden geopolitical conflict could cut off their supply.
Precisely. The military demands absolute domestic security. Because Kopin handles everything inside the United States, from manufacturing the silicon wafers to the intricate optics and the drive electronics, they act as a closed-loop system.
Once a major defense contractor integrates them as a sole source provider, the switching costs become impossibly high, don't they?
They do. They aren't going to risk ripping out a certified domestic supplier to save a few pennies.
That brings us to the catalyst timeline.
And this is where the narrative just accelerates. We're looking at an overflow of concrete, highly lucrative contract wins. I mean, in a single month, they locked in nearly $40 million in back-to-back contracts.
Wow.
First, a $21.5 million follow-on production contract for thermal weapon sights. That provides your solid, recurring defense revenue. But then they announced a breakthrough $3.2 million contract for the Sentinel FPV drone goggles.
Now, FPV stands for first-person view. And if you look at the footage coming out of modern global conflicts, these highly maneuverable, low-cost drones are completely reshaping battlefield tactics.
Completely.
But why does the display technology in the goggles matter so much to the pilot?
Well, imagine you're piloting a drone flying at highway speeds through a dense urban environment. You're wearing a headset, relying entirely on the live camera feed, If there's even a millisecond of latency between what the drone physically does and what the screen shows your eyes, your brain detects the mismatch.
Oh, and you get motion sick.
Severely motion sick. Furthermore, the displays must be incredibly bright so you can clearly read targeting overlays without losing your focus. Conventional screens simply cannot handle the dual requirements of zero latency and extreme luminescence. That is the exact physiological bottleneck Kopin's optics solve.
And that's why the initial $3.2 million contract is really just the tip of the spear. This specific drone program has the potential to scale to 40,000 units by 2028.
40,000 units, yeah.
It's a classic land and expand model. You win the prototype phase, prove your reliability, and ride the wave into full deployment.
Yeah.
But we need to talk about the artificial intelligence pivot because this completely redefines their valuation multiplier.
Yes, the Fabric AI partnership.
Right, they recently announced a partnership with Fabric AI to pioneer the world's first micro-LED-based GPU-to-GPU interconnect, which they're calling Neural I/O.
And to understand why this matters, this requires a look at the physical limitations of current data centers. Right now, AI infrastructure is hitting a literal wall. You have rows upon rows of incredibly powerful GPUs crunching algorithms, and they need to share that massive amount of data with each other constantly.
And historically, they share that data by sending electrical signals over traditional copper wiring.
Exactly.
But copper resists electrical current. That resistance generates heat. When you have thousands of advanced chips generating heat, you need immense liquid cooling systems, which just devour power. The facility literally runs out of electricity before it runs out of processing capability. It's a fundamental physics problem.
Which brings us to Kopin's brilliant technological leap. Instead of relying on copper, they're utilizing their microled expertise to create optical interconnects. They're essentially transmitting data between these processing chips using pulses of light.
And light doesn't generate heat.
Right. Light does not generate the friction and heat of electrical resistance. This means you achieve light-speed data transfer with a fraction of the power consumption, drastically lowering the thermal footprint of the entire server rack.
And this isn't just, a concept on a whiteboard. They received an initial $5 million purchase order to develop this exact technology. Even better, they secured a 19.9% equity stake in Fabric AI itself.
That's the best part.
Yeah, so they aren't merely a disposable vendor, they're a vested partner in the success of the architecture. And there is a clear contracted roadmap that unlocks an additional $15 million to $25 million in future funding once they successfully demonstrate the working prototype.
Exactly. So if we're mapping out the near-term timeline, there are two major events to keep on your radar. First is the initial 2026 earnings call scheduled for May 12th. What you want to watch for there is revenue normalization, basically confirmation that the funnel we talked about has cleared and the delayed government orders are finally flowing onto the balance sheet.
Got it. And the second event?
The second event is their upcoming 2026 Technology Demo Days tour. They're taking this hardware on the road to key markets to showcase the Sentinel drone goggles and the Neural I/O interconnects directly to institutional investors. Seeing the physical hardware in action is what ultimately converts institutional skepticism into invested capital. Now let's pivot to the chart.
Looking at the recent price structure, the technicals are telling a story that perfectly aligns with the fundamental shift we just outlined. Following the announcement of that $3.2 million drone contract, the share surged 24.6%.
That is a massive move.
It is.
Yeah.
Now, if you spend time watching the microcap space, you know that a 5 or 10% move on any given day can just be random algorithmic noise. It doesn't necessarily mean anything. But an explosive upward surge of nearly 25%, that is a psychological breakout. It completely shatters the prior consolidation basis where the stock had been trapped, just trading sideways for months.
And you can't just look at the percentage move. You really must analyze the volume behind it. In technical analysis, volume is the undeniable truth teller. The sheer influx of buying pressure on that upward move confirms that this isn't just a handful of retail day traders pushing the ticker around on a message board.
Right, that requires serious institutional accumulation.
Exactly. When a stock breaks out on that level of sustained volume, it fundamentally shakes off its historical identity as a slow-moving laggard. It establishes a very recognizable pattern of higher highs and higher lows, forcing the broader market to respect it as a true momentum play.
So what does market sentiment look like?
It has shifted decidedly bullish, and that optimism is coming from all directions. It's a rare confluence of institutional backing and highly influential retail flow. For instance, James Altucher, who commands a sprawling audience, publicly stated he is incredibly bullish on the company.
Wow, really?
Yeah. And it wasn't just vague enthusiasm. He specifically pointed to their breakthrough in microLED optical interconnects as the catalyst. When that kind of precise narrative hits the retail newsletter space, it creates a powerful demand imbalance.
But retail momentum alone isn't enough to sustain a long-term wealth-building thesis, right? You need the institutional validation to back it up, and we are seeing exactly that here.
Definitely.
Following the recent strategic moves, Stifel reinstated their coverage with a buy rating and set a $5.50 price target. Lake Street also raised its target to $5, maintaining their buy rating. What I found particularly insightful about Lake Street's note is that they specifically cited the Fabric AI deal as a genius, capital-light way to enter the data center market.
Let's zero in on that phrase capital light, because usually when a smaller company announces they're pivoting into artificial intelligence hardware, investors should immediately check their wallets.
Because it's so expensive.
Exactly. Developing proprietary processing chips from scratch requires billions of dollars in R&D. It's a spending race they simply cannot win. But Kopin isn't trying to build the GPU itself. They're providing the critical missing puzzle piece, the optical interconnect that allows the billion-dollar GPUs to function efficiently.
Partnering allows them to capture the upside of the boom without destroying their own balance sheet.
Precisely.
And the smart money clearly agrees with that strategy. If you look at the participants in that $56 million private placement, it was led by industry heavy hitters like Theon International and Ondas Holdings. These aren't passive index funds throwing darts. These are strategic, industry-aligned investors putting serious capital on the line because they recognize the underlying structural advantage.
Now let's talk about the risks.
Because no investment is without risk, and if you're managing capital, you must view every narrative with a highly critical eye. Let me present the bearish perspective because there are two major hurdles you must be comfortable with here.
Okay, let's hear them.
The first is severe concentration risk. Despite the brilliant AI pivot, this company remains heavily tethered to a small cluster of sprawling U.S. defense programs. We literally just witnessed the danger of this in their fourth quarter. A routine budget standoff in Washington, and their revenue froze overnight, dropping 42%. When you rely on the Pentagon as your primary customer, their bureaucratic delays become your cash flow crises.
Which is a perfectly valid, grounded concern. But I would push back by pointing directly to the $56 million cash buffer they just raised. In the past, a delayed government contract might have threatened their day-to-day operational survival. Today, that war chest drastically reduces the immediate existential threat of those procurement delays. They can afford to keep the lights on and fund research while they wait for Washington to process the paperwork.
Fair point. The cash buffer absolutely provides a runway. But the second major risk is valuation and execution. As a recent piece highlighted, the shares are currently pricey following the turnaround and the recent technical run-up. The market is aggressively pricing in a lot of future success.
That's true.
The company has a phenomenal narrative right now, but a narrative does not pay dividends. They still have to prove they can physically scale the drone goggle production to meet those 40,000 unit targets without manufacturing hiccups. And more importantly, they have to successfully deliver the highly complex Fabric AI prototype. If they fail to execute on the engineering side, that premium valuation will collapse under its own weight.
Execution is undeniably the ultimate hurdle. But again, if we look at the leading indicators, that 2.8 to 1 book-to-bill ratio proves that the underlying demand for what they engineer is rock solid. The market desperately wants their solutions. Now it simply comes down to the logistics of delivery and commercialization.
So with everything on the table, what's the final verdict?
Based on the deep research and the synthesis of these incoming catalysts, we award the stock a bullish score of 8 out of 10. The elevator pitch is this. You have a vertically integrated defense optics platform that has cleverly maneuvered into the hyper-growth data center space, all without draining its own resources.
A really unique setup.
It is. They fortified their balance sheet with $56 million in strategic capital. They're the trusted sole source provider for critical Department of Defense programs. And they're actively pioneering a physical solution to the biggest thermal bottleneck in AI today.
But the crucial takeaway for you is the time horizon. This must be viewed as a multi-year hold. If you're building wealth, you cannot treat this as a quick trade based on a single press release or a momentary technical breakout. You need the patience to wait for the drone program to steadily scale toward that 40,000 unit potential by 2028.
Right, it takes time.
And you need the discipline to let the Fabric AI prototype transition out of the laboratory and into a commercial production phase that unlocks that next $15 to $25 million in funding. It's about letting the transformation we discussed at the very beginning fully mature from an ambitious pivot into a structural powerhouse. Need emergency cash. MaxLend Loans offers short-term installment loan options up to $3,750 for eligible customers. Apply through the link below and carefully review the APR, fees, repayment terms, and total cost before accepting any offer.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.